Hi everyone, my name is Nick Cannon and today I'm going to walk you through an in-depth explanation of how to set up an infinite banking strategy for yourself. This is a good one, you're going to want to stay until the end. This financial strategy involves using a whole life insurance policy as a personal bank to save and borrow money. To start, it's important to familiarize yourself with the basic principles of infinite banking. This includes understanding how whole life insurance policies work, how the cash value component of the policy functions, and how you can access and use the cash value for your personal financial needs. Additionally, research the different types of whole life insurance policies available and their respective features, as well as the pros and cons of using a whole life insurance policy for infinite banking. It's also important to understand the concept of dividend-paying whole life insurance policies, as these types of policies are typically recommended for infinite banking. Dividend-paying policies are issued by mutual insurance companies, which are owned by policyholders, and they can return a portion of the premiums paid in the form of dividends. The dividends can then be used to purchase additional paid-up insurance, reduce premiums, or accumulate cash value. Additionally, research the different types of life insurance policies available and their respective features, as well as the pros and cons of using a whole life insurance policy for infinite banking. It's also crucial to understand the concept of policy loans and how it works in infinite banking. Policy loans are a feature of whole life insurance policies that allows policyholders to borrow money from the cash value of their policy without having to qualify for a loan or pay interest. With all of that in mind, here are the 10 steps you need to take in order to have a successful infinite banking strategy. 1. Choose a reputable insurance company that offers whole life insurance policies. Look for a company with a strong financial rating and a history of paying out claims. When choosing an insurance company for your infinite banking strategy, it's important to choose a reputable and financially stable company. One way to assess the financial stability of an insurance company is to check their rating from independent rating agencies such as AM, Best, Moody's, and Standard & Poor's. These agencies assess the financial strength of insurance companies and assign them a rating based on their ability to meet policyholder obligations. It's best to choose a company with a high rating, as it indicates that the company is more likely to be able to meet its financial obligations to policyholders in the future. It's also important to look for a company with a history of paying out claims. A company that has a history of paying claims promptly and fairly is more likely to continue doing so in the future. You can check the complaint records of insurance companies with the National Association of Insurance Commissioners website. Additionally, it's important to research the company's reputation and customer service. Look for customer reviews and testimonials, and ask for recommendations from friends or family who have experience with the company. Lastly, it's important to check if the company has experience in offering dividend-paying whole life insurance policies, as these policies are typically recommended for infinite banking. You can check the company's website or ask the insurance agent for information on the dividends they've paid out in the past and their projected dividends for the future. 2. Meet with an insurance agent who specializes in infinite banking to discuss your options. They can help you choose the right policy for your needs and budget. When setting up an infinite banking system, it's important to work with an insurance agent who has experience and knowledge in this specific area. They can provide you with information and advice on the different types of whole life insurance policies available, the features of each policy, and the pros and cons of using a whole life insurance policy for infinite banking. They can also help you understand the concept of policy loans and how they can be used in your infinite banking strategy. An insurance agent who specializes in infinite banking can also help you determine the right coverage amount for your policy based on your financial goals and current income. They can also help you understand the potential returns on your policy and how they compare to other investment options. Additionally, an insurance agent who specializes in infinite banking can help you understand the dividends and the projected dividends of the insurance companies, which can be a crucial factor in your decision making when choosing the insurance company. It's important to discuss your budget and financial goals with the agent to find a policy that fits your needs and budget. They can also help you understand the premium payments and the projected cash value of the policy and how it will grow over time. Ultimately, working with an insurance agent who specializes in infinite banking can help ensure that you choose the right policy for your needs and that you fully understand the potential benefits and risks of using a whole life insurance policy as a personal bank. 3. Determine the amount of coverage you need for your policy. The coverage amount should be based on your financial goals and current income. One of the first steps in setting up an infinite banking system is to determine the amount of coverage you need for your policy. The coverage amount is the amount of death benefit that will be paid out to your beneficiaries in the event of your death. When determining the coverage amount, it's important to consider your financial goals and current income. For example, if your goal is to use the cash value of the policy to pay off a mortgage or other debt, then you may need a higher coverage amount to ensure that your beneficiaries will be able to pay off that debt in the event of your death. If your goal is to use the cash value for long-term savings or as a source of emergency funds, then a lower coverage amount may be sufficient. It's also important to consider your current income and financial obligations when determining the coverage amount. If you have a high income and few financial obligations, then you may be able to afford a higher coverage amount. If you have a lower income or significant financial obligations, then a lower coverage amount may be more appropriate. It's important to keep in mind that the higher the coverage amount, the higher the premiums will be. Therefore, it's important to find a balance between the coverage amount you need and what you can afford to pay in premiums. Ultimately, determining the right coverage amount is a personal decision that should be based on your individual financial goals and circumstances. It's important to consult with an insurance agent who specializes in infinite banking to help you determine the right coverage amount for your policy. 4. Pay the premiums for your policy. Whole life insurance policies require you to pay premiums for the duration of the policy. When you purchase a whole life insurance policy, you will be required to pay premiums to keep the policy in force. Premiums are the payments you make to the insurance company in exchange for the coverage provided by the policy. With a whole life insurance policy, the premiums are typically higher than term life insurance policies, but this is because the coverage is permanent and the policy also accumulates cash value over time. The premium payments are typically made on a monthly, quarterly, or annual basis, depending on the policy. It's important to understand that the premium payments are usually fixed and will not change over the life of the policy unless you choose to adjust the coverage amount or make other changes to the policy. When paying the premiums, it's important to ensure that you can afford the payments and that they align with your budget. It's important to be aware that if you miss a premium payment, the policy may lapse and the coverage will be terminated. It's important to understand that the premium payments are not only for the coverage, but also for the cash value component of the policy, as the premiums will contribute to the cash value accumulation, which will later be available for policy loans. It's important to discuss the premium payments with your insurance agent and to make sure that they align with your budget and financial goals. They may also provide you with different payment options, such as automatic payments, to make it more convenient for you. Additionally, it's important to understand the dividends and their impact on the premiums, as some insurance companies offer dividend-paying policies, which may allow you to reduce or even eliminate your premium payments while still accumulating cash value. 5. Start making payments into your policy, which will go into the cash value of the policy. These payments will earn interest and grow over time. Once you have set up your whole life insurance policy and are paying the premiums, you can start making additional payments into the policy. These payments will go into the cash value component of the policy, which is essentially a savings or investment account within the policy. The cash value component of the policy earns interest over time, just like a savings account in a bank. The interest rate is typically fixed and is determined by the insurance company. The interest rate is generally higher than traditional savings account, but lower than other investment options such as stocks or bonds. It's important to understand that the cash value component of the policy grows over time, but it does not grow at a guaranteed rate. The growth of the cash value component is based on the interest rate and the dividends that the insurance company pays out. You can make payments into the policy at any time as long as the policy is in force and you have not reached the policy loan limit. The additional payments can be made through a one-time payment or scheduled payments, such as monthly or annually. The more you pay into the policy, the faster the cash value will grow. It's important to note that the cash value component of the policy is not accessible until the policy is in force for a certain period, usually at least 1 year. Additionally, the cash value component of the policy is not subject to income tax as long as the policy is in force and the policy loans are repaid. It's important to consult with your insurance agent to understand the projected cash value growth and the interest rate of the policy, and to make sure that the payments align with your budget and financial goals. 6. Once your cash value has grown to a significant amount, start borrowing against it. The borrowed money can be used for any purpose, such as paying off debt, investing, or starting a business. One of the key benefits of using a whole life insurance policy for infinite banking is the ability to borrow money from the cash value of the policy. This feature, known as a policy loan, allows you to access the cash value of the policy without having to qualify for a loan or pay interest. It's important to note that the policy loan feature is only available once the cash value has grown to a significant amount. The amount that you can borrow will depend on the policy loan limit and the cash value of the policy. The policy loan limit is typically set by the insurance company and is usually a percentage of the cash value. The borrowed money can be used for any purpose, such as paying off debt, investing, starting a business, or as an emergency fund. The money borrowed does not have to be repaid with interest, but it is important to keep in mind that the borrowed amount will reduce the cash value and death benefit of the policy. It's important to understand that any interest or dividends earned on the borrowed money will go to the insurance company, not the policyholder. Additionally, it's important to note that if the policy is terminated or the policy loans are not repaid, the outstanding loans will be deducted from the death benefit. It's important to consult with your insurance agent to understand the policy loan. limit the projected cash value of the policy and to make sure that borrowing aligns with your budget and financial goals. Additionally, it's important to have a plan in place for repaying the policy loans so that you can maintain the cash value and death benefit of the policy. 7. Continuously pay the premiums and make payments into the policy to keep the cash value growing. To ensure that your infinite banking system remains effective, it's important to continuously pay the premiums and make additional payments into the policy. By keeping the policy in force and making regular payments into the cash value component, you can ensure that the cash value of the policy continues to grow over time. Premium payments are typically required for the duration of the policy and are necessary to keep the policy in force. By paying the premiums on time, you can ensure that the policy remains active and that the death benefit will be paid out to your beneficiaries in the event of your death. Additional payments into the policy can be made at any time and are a great way to increase the cash value of the policy more quickly. The more you pay into the policy, the faster the cash value will grow and the more you'll have available to borrow later on. It's important to keep in mind that the cash value of the policy is not guaranteed to grow at a specific rate, and the growth of the cash value is based on the interest rate and dividends that the insurance company pays out. It's important to consult with your insurance agent to understand the projected cash value growth and the interest rate of the policy, and to make sure that the payments align with your budget and financial goals. Additionally, it's important to have a plan in place for repaying the policy loans so that you can maintain the cash value and death benefit of the policy. 8. Monitor the performance of your policy and make adjustments as needed. If you need to increase the coverage amount or change the payment schedule, talk to your insurance agent. To ensure that your infinite banking system remains effective, it's important to monitor the performance of your policy and make adjustments as needed. This includes keeping an eye on the cash value growth, dividends, and the interest rate of the policy. It's important to periodically check the cash value of the policy to ensure that it is growing as expected. If the cash value is not growing at the rate you had hoped for, it may be necessary to make adjustments to your payments or to discuss this with your insurance agent. Additionally, it's important to monitor the dividends paid by the insurance company, as they can have a significant impact on the cash value growth. If the dividends are lower than expected, it may be necessary to consider changing the insurance company or policy. It's also important to monitor the interest rate of the policy, as it can affect the growth of the cash value. If the interest rate is lower than expected, it may be necessary to consider other investment options. It's important to note that your personal circumstances and financial goals may change over time. Therefore, it's important to review your policy and make adjustments as needed, such as increasing the coverage amount, changing the payment schedule, or making additional payments into the policy. It's important to discuss any changes or adjustments with your insurance agent, who can help you make the right decision and ensure that your infinite banking system remains effective and aligns with your personal financial goals. 9. Use the money from your policy as a personal bank and enjoy the benefits of having access to low-cost loans and a growing savings account. Once your cash value has grown to a significant amount, you can start using your whole life insurance policy as a personal bank. This means you can access the cash value of the policy through policy loans and use the money for any purpose, such as paying off debt, investing, or starting a business. One of the main benefits of using your policy as a personal bank is the access to low-cost loans. Policy loans do not require you to qualify for a loan or pay interest. The only cost associated with policy loans is a small loan fee that is typically less than 2% of the loan amount. Another benefit of using your policy as a personal bank is the ability to grow your savings account. The cash value component of the policy earns interest over time, and the interest rate is typically higher than traditional savings account, but lower than other investment options such as stocks or bonds. Additionally, through dividends-paying policies, you can receive a portion of the premiums paid back in the form of dividends, which can be used to purchase additional paid-up insurance, reduce premiums, or accumulate cash value. By using your policy as a personal bank, you can also enjoy the flexibility to use the money for any purpose, such as paying off debt, investing, or starting a business. Additionally, the cash value component of the policy is not subject to income tax as long as the policy is in force and the policy loans are repaid. It's important to keep in mind that while the cash value component of the policy is growing, it is not guaranteed to grow at a specific rate, and the growth of the cash value is based on the interest rate and dividends that the insurance company pays out. Additionally, it's important to have a plan in place for repaying the policy loans so that you can maintain the cash value and death benefit of the policy. Lastly, it's important to consult with an expert such as a financial advisor or insurance agent who specializes in infinite banking to verify if this strategy aligns with your personal financial goals and risk appetite. Thank you for watching. I hope you learned something new today. Please don't forget to like and subscribe. Also, if you'd like more information or want to set up a call to discuss your situation, click the link in the description.